And our next guest says he's a bit cautious on casino stocks, at least in the short term. We have JPMorgan's Billy Ng. He's one of the top-ranked analysts on Asian gaming companies tracked on the Bloomberg system, and his recommendations have generated returns of as much as 95%. And he joins us on this Friday. Billy, nice to see you. Thank you for joining us once again. So did you hear me talking there about price to book and price to revenue for a lot of these casino stocks?
Yeah.
They sound pretty expensive at this point, don't you think?
Yes, they are on a risk-reward basis. They are not as attractive as last year. But like some of them, if you look at the Hong Kong listed one, it's not as bad because they do provide a very strong growth picture. So maybe a year from now or 2011 numbers, it will look a bit better.
Okay, but in the short term, you're remaining cautious.
Yes.
So what does that mean? Are you selling off? Are you
no,
advising
I'm not
people to sell
selling off, but like just wait and see. There's no rush to buy in right now. The reason I'm cautious is like if you look at the first 2 month data, they are perfect, like up 60% year over year. But I think the overall general sense of concern is how China's doing in the short term. Especially there are a lot of talk about credit tightening, liquidity tightening in China, and what the impact it will have on Macau. Right now, the visibility a bit low, and I would say like if medium term, which means pausing the Q2, I'm pretty positive. Fundamental is still good, and I think the demand for gaming product is still there as long as China continue to grow. But shorter term, just because the VIP market has been performing so well, we think it's a bit hard to sustain at that level.
So you're saying hold right now, don't sell off, because you still are expecting growth. I mean, you said it might normalize to 15 to 20% year-on-year growth. That sounds pretty good. I mean, that's hard to find these days in these conditions.
Exactly. So like medium term, we are still quite positive. Two things happening. One, as you mentioned, the demand over the year, we're still expecting close to 20% growth. And on the other hand, if you look at the supply side, it's very, very good, like probably the best since 2005. We only have 1% increase in number of tables in 2010. So I think once we pass through this overhang concern of the China liquidity issue, we will see a very strong earning growth this year for most of the names.
How much upside do you think there is in earnings growth for these big casino names?
I think approximately you can look for 20 to 30%. Because they do have some operating leverage. If they can get 20% top line growth, earning growth should be around 30%.
And what does that mean? How does that translate into their stock price? Does that mean a 20% upside potential for all of these stocks?
Around that, I would say 20, 30%, because like last year they outperformed. Last year a lot of things was related to re-rating, but now they are, in terms of multiple, they are pretty fair already. So like the return has to come from the earning growth. Okay.
Let me just ask you though, you know, we have a new kid on the listing block in terms of casino names operating in Macau. MGM with the Pansy Ho. Looks like they're going to sell shares here in Hong Kong. What do you think of this listing? I mean, the timing is a little suspect, right? They're looking for August instead of right now, obviously.
Right. I don't know, to be honest. I don't have too much information on that. But I think, first of all, they should get listed, given that all the other 5 players have been listed. And they do, the listing of the subsidiaries will be able to help the balance sheet of MGM Mirage. And in addition, longer term, they do need more capital if they want to expand to build another casino in Macau. Timing-wise, who knows? Like, the process is long. And by the time they do it in August, I don't know, like maybe it's a better market.
Maybe it's a better market. I mean, not many gains though. Not much gains in terms of what you've seen for Sands Macau, also for Wynn Macau. I think Wynn Macau is pretty much flat so far since its listing. So I can understand why they're waiting. But what about the controversy with MGM's tie-up with Pansy Ho? You know, the Jersey Gaming Commission says, you know, it seems like the Ho family is very questionable. Are the words I think they used.
But I think like the best to judge them, I think this has to come from their partner MGM, and if they feel comfortable and they are putting a lot of money, continue to invest in Macau and stick with the JV, I think there shouldn't be any issue on that.
There shouldn't be any issue on that. They might have to give up their Atlantic City gaming houses though.
At this point, it's not a bad decision to give up Atlantic, because like I think down the line, most people still feel at least the next 3 to 4 years, you won't see any big upturn on that market.
Okay, quickly, let's move on to Sands China, because this is your top pick. We'll get into that more after this commercial break, but why exactly, give us a taster though, why exactly is it #1 for you?
Right, basically shorter term, I'm a bit cautious, but longer term, I'm very positive on Macau. Basically, I think still, in terms of penetration, all the things, there's still a long way to grow in Macau. And if you are positive on long term, you like Macau story as a secular growth sector, you want to pick someone that has the biggest expansion plan, which also have proved their execution ability, and in addition to that, they have a bit differentiate strategy, because if you look around all 6 players, they are the only one focusing a lot on the non-gaming and also the mass market.